Hello students, we'll see the next part under the contract costing theory part. We'll see the types of contracts. We'll see first one, fixed price contracts. Fixed price contracts, it's a type of contract in which contract agrees to pay the contract is agreed to pay a fixed amount at the time of a fixed amount in future. He agreed to pay at the time, he agreed to pay at the time of the agreement. Okay, it's a fixed amount. So after the agreement it cannot be changed, so it's in a fixed amount. Okay, next, contract with the escalation and de-escalation clause. Okay, contract with the escalation and de-escalation clause. See, this is a type of contract in which contractee agrees to pay not only fixed contract price agreed upon, but also the increase means escalation means increase in the cost of the contract, and the eligible for downward revision of the contract price in the case decrease de-escalation. Escalation means increase the price of the contract, de-escalation means decrease the cost of the contract. Okay, see, escalation clause. Escalation clause is a clause incorporated in the agreement between the contractor and the contractee which provides the upward adjustment in the contract price. Means, for example, now the particular contract and contractee agreed for the particular contract for 1 lakh rupees. Means, okay, under the escalation clause they are going to increase in the future. For example, 1,10,000 because of the changes in the cost of the materials, cost of the labor, or the as per the market situation, present market situation, they are going to increase the contract price. That is the escalation clause. Next, de-escalation clause means there is a decrease in the cost of the contract, price of the contract, because of the decrease in the cost of the material or a decrease in the cost of the labor, right? De-escalation clause is a clause included in agreement between the contractor and contractor which provides the downward revision, means decrease the materials and labor. Okay, next, first one is a fixed. It's fixed, we cannot change. Under the escalation and de-escalation, escalation means increase, de-escalation means decrease. Okay, next, cost plus contract. Under the cost plus contract is a contract in which the contract price is ascertained by adding a specified amount of profit or a percentage of profit to the cost of the contract. It's very easy and it's very popular. Cost plus contract means first we have to calculate the cost of a but estimate the cost of the contract. Then we are adding the cost plus profit equal to sales, like that. Okay, we have first we have to estimate the cost, then we are adding a certain percentage of profit, then that is the cost plus contract. And this type of the contract is suitable in cases where it is not possible to compute the cost in advance with a reasonable degree of accuracy due to unsuitable conditions of market prices, labor, etc. Sometimes it's not possible to find out the cost, compute the cost in advance, right? In that case this particular type is suitable. And in case where the contract takes number of years for the completion, and in the case of the consideration work during the war time, or for the production of the special articles, right? In the case of where quality of the work is of utmost importance, or work to be done is not definitely fixed in advance. So in these cases this is particular cost plus contract is suitable. Okay, next we'll see the advantages of cost plus contract. First one will see advantages to the contractor. First one is the advantages to the contractor. See, no risk no loss. Under this, no risk no loss for the contractor, because the contractor is getting the fixed amount of profit. Protection from fluctuation. If there is a fluctuation, it is not affected to the contractor. Then advantages to the contractee: reasonable price, assures quality, reasonable price. It's a very reasonable price and assures quality to a particular contractee. And what are the disadvantages of cost plus contracts? We'll say first one, disadvantages to the contractor. deprived of the advantages of favorable market price. Sometimes there is a changes in the market price, right? Market price may increase, okay, as per the particular present market price, the particular thing, the market price, contract price may increase, but as per the cost plus contract means you have the particular contractor have to charge only the certain amount, so it is a deprived means vanchite vanchan amount, right? Okay, then lower profits is lower the profits, because in the other things means you can get the profits in any other ways, but under the con cost plus means he is getting the fixed amount of profit. Then disadvantages to the contractee: reward for inefficiency, and the unknown contract price. The contract price unknown to the particular contractee. Okay, target price contract. Next, fourth one is the type target price contract. It is a type of contract in which the contractor and the contractee agrees on a certain fixed lump sum price, the larger price, and then the contractor tries to execute the contract at the below the price. Okay, it's a target price is nothing but they're fixing a particular on price they are fixing. Okay, it is a target, they have to finish the work within that particular price. See, it is a type of contract in which contractor and the contractor agrees on a certain fixed lump sum price, the larger price, and then the contract of contracts. Then we'll see the what are the main difference between the job costing and contract costing. First we'll see cost unit. Under the cost unit, each job is treated as, okay, first one is the cost unit. Under the job costing, each job is treated as the cost unit. Under the contract costing, each contract, because while calculating the cost, we are treating the each job is separate. But under the contract, each contract is separate. Okay. Under the location of the executing the work, the job work is executed in the factory premises. Executed in the factory premises. Under the contract, work is executed at the premises of the contractee. Next, indirect cost. Most of the expenses are under the job costing, most of the expenses are indirect in nature. Under the contract costing, most of the expenses are direct in nature. Under the pricing is influenced by the individual condition and general pricing policy of the organization. Under the job costing, the price is decided on the basis of the individual conditions and the pricing policy of a particular company. Under the contract costing, pricing influenced by specific clause like escalation of the selection of the contract, whether the escalation clause, de-escalation clause, cost plus contract, okay, like that. Next one, size of the job is smaller than that of contract. This is job costing is a smaller size, but the contract costing is a larger size than the job costing. Okay, next, job payment of price. Job price is generally paid by the customer in full immediately on the completion of the job. After the completion of the work, they are paying. Job costing is nothing but, for example, printing press, right? This is an example for the job costing. After the completion of the full work, after that customers are paying the price, but under the contract, price is generally paid by the contractee in installments depending upon progress of the work as certified by the engineer or architect of the contractee. Next, investment. There is heavy investment on the assets initial in case of job costing. Under the job costing, it is like a production. For example, printing machines means at the time of installation of the machines, it is heavy investment, right? So under the job costing, it's need heavy investment to purchase the assets, but under it does not involve much investment for the asset. For example, construction of the building means it does not need much type of the fixed assets, right? It's no only need the materials. Next, transfer of profit. Profit earned on the job is entirely transferred to profit and loss account. Transferred entirely to the profit and loss account. In the case of incomplete contract, only proportionate profit is transferred to profit and loss account depending upon the stage of completion of the work or contract. Okay, only the it's case of incomplete contracts, only proportionate profit is transferred. Then applicability. printing, foundry, engineering and shipbuilding industries mainly used in these things. But under the contract costing, it's used mainly in the civil engineering, means civil building the any bridges or anything, roads, bridges, buildings, etc. Okay, or petrol pumps, etc. Contract costing is used in the mainly in the civil works. Okay, this is about the main theory part. Under the contract costing, we'll see the some other thing under the contract costing in the next class. Thank you.